Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to Excel balance sheet. First, open a new Excel workbook and label 3 columns: assets, liabilities, and owner's equity. This foundational step ensures a clear structure for your financial data. Remember, a balance sheet is a snapshot, so precision in categorizing each item is key. We'll walk through populating each section with relevant financial figures, ensuring your sheet is both accurate and easy to understand. Now, let's build the assets section. Start by listing your current assets, which are items convertible to cash within 1 year, like cash on hand and accounts receivable. Below these, add your non-current assets, such as property, plant, and equipment, which are long-term investments. Summing these 2 categories will give you your total assets, a crucial figure for understanding your company's resources. Next, we tackle liabilities and owner's equity. Begin with current liabilities, like accounts payable and short-term debts, due within 1 year. Then, list long-term liabilities, such as mortgages or bonds, which extend beyond 12 months. Finally, calculate owner's equity, comprising initial capital and retained earnings. The sum of your total liabilities and total equity must precisely match your total assets, adhering to the fundamental accounting equation. To finalize your balance sheet, the most critical step is ensuring it balances. Your total assets must exactly equal the sum of your total liabilities and owner's equity. Utilize Excel's SUM function to automatically calculate totals, minimizing manual errors. Regularly review and update this document to reflect current financial positions. A perfectly balanced sheet confirms the accuracy of your financial records, providing a clear picture of your company's financial health.
Thanks for watching. Consider subscribing if I helped unscramble your problems.